Hello, everyone. Just getting some confirmation. Am I live? Am I not live? I have no idea. I'm not sure right now who's live and who's not live on this. I'm trying to get this like OBS streamer running so I can show you guys a few things rather than you just see my talking head realistically. So let's see if this works, right? We have this OBS here. Okay, good. It seems like things are working pretty well right now. So I'm gonna try this. It's a late start. Good morning, everyone. It's a late start because I was trying to figure this out realistically, and this is something new. I think it's going to be pretty effective going forward to show you guys things that I'm looking at so far, and how we could start this week realistically. So instead of just looking at my face. So let's get this thing started. On the screen here we have my trading view. This is rad. We have, what is it called? Rite Aid, right? So this was one of the main... I'm still a little sick, by the way. This was one of the... I'm so sorry. This is one of the big news events that happened over the weekend, realistically. So a massively popular drug chain, right? Rite Aid, ticker symbol RAD, has filed for Chapter 11 bankruptcy, protection buckling under more than $3 billion of debt and opioid-related liabilities. So Rite Aid, which has been suffering store closures across the U.S., also received a commitment for $3.45 billion new funds from certain lenders. Meanwhile, the pharmacy chain will sell its Elixir Solutions business to MedImpact Healthcare, a pharmacy benefits company. So Rite Aid joins other drug markets that have declared bankruptcy due to opioid litigations, such as Mallinckrodt, I think, Endo, Purdue Pharma, and drug distributors America Source Bergen, Cardinal, and McKesson, and pharma giants Johnson & Johnson and Teva have all agreed to pay billions of dollars to settle their opioid-related liabilities. As for Rite Aid, the Department of Justice earlier this year alleged that the company deliberately filed unlawful prescriptions for opioid painkillers, including fentanyl and Oxycontin. So this bankruptcy filing also comes at a time where consumer confidence has been weakening in the backdrop of sticky inflation, and in July analysis, ratings agencies Moody's said that defaults among retail and apparel would likely rise as profits continue to be dented by elevated costs. So higher markdowns are muted consumer spending. So Moody's said home goods, apparel retailers, and smaller companies were especially at risk, even mentioning Rite Aid specifically. So it's good that we have this screen because you take a look at things like XLP. Not only is XLP getting impacted by that weight loss drug, but also you've seen that it's this downside leg is due to some of these sales drops, right? Like theft in the U.S. causing revenue to drop in the billions in names that are in this ETF right now. It is pulling a little higher. I think it's extremely oversold, but we have this situation where inflation is impacting a lot of these stores, and we're seeing bankruptcy. So this is the first of many, as a lot of people are generally short these markets right now, right? A lot of people are looking at this week specifically leading into OPEX to be the killer, right? To see markets actually get slumped from this area. So we do have OPEX this week. Monthly OPEX comes out on Friday, October 20th, which is the options expiry for that month. And we're going to see equities, indices, right, all that good stuff expire on the monthly aspect in options, which generally presents more volatility. So I'm going to talk about trade ideas for the session, right, what we're looking at right now and where this market could go. But I do want to go through some other news here first. Carl Icahn, right, he's been In the news recently as well, billionaire activist investor Carl Icahn claims that his short bet against malls will be manipulated against him. Icahn has had a short position against commercial mortgage-backed securities through the use of credit default swaps, or CDS, for the last 4 years. While the mall bet paid off during the COVID-19 lockdown, Icahn has made about $900 million in 2020, and it hasn't been working late. Last year, Icahn's enterprises IEP CDS positions took a $742 million paper loss, and its short credit positions have also been dropped. So Icahn suggests that the recent market manipulation relates to Crossgates, the mall outside of Albany, New York. So we'll see how this pays off. A lot of politicians also have general shorts that are based on the U.S. economy as a whole. We're seeing that right now the S&P is floating still. Its head is above water, and this week is going to be either we capitulate or we just start the end of year rally, realistically, the Santa Claus rally. So not only OPEX, we have earnings this week as well. We have some banks that are coming out. JP Morgan and a bunch of their big boys came out last Friday, and we continue the bank earnings on Tuesday with Goldman Sachs and Bank of America, which are going to be closely watched as financials have been struggling a little. We also have Tesla and Netflix, the first of big tech that's going to come out in terms of earnings this week, which come out on Wednesday. And tech is one of the main assets that a lot of people are watching because they seem extremely overbought in current market conditions where the market has been slumping. The triple Qs, for example, and NASDAQ have not really broken their prior lows, right? That July or August low, I should say, has barely been touched by big tech, while the S&P and other assets are slumping further down. So has the bottom been seen for the end of the year? This week, and I believe halfway through next, is going to be extremely telling for that. We have today and tomorrow for the sellers to really step in on this market and prove what they have. Otherwise, we're going to probably see a rally, which can be a little muted into OPEX, and then we're probably going to see that continuation next week. We do have massive tech earnings next week, and there, I think, are the only things to shape up this earnings period, right? This is the only thing that could actually push big tech down, is if we have shitty tech earnings in Amazon, Apple, Microsoft, Meta, what else? Google, right? Some other stuff. That's the only way that I think this tech market actually pulls back significantly and we see that drop in the overall market. You can see this, the SP500 on my screen, the SPY. I'm looking at this 433, 434 to be a temporary top here on the session, right? We're very, very close to it to see if the sellers can push it down. The sellers have a lot of work to do today and tomorrow if this is going to go bear, but you've seen that they've picked it up overnight. I think what they're doing is clearing some of the auction that I'm going to show you on the futures in just a bit before we see that next downside press. Triple Qs, you can see, you got this like little bull flag type scenario holding out. We've barely broken the August lows, right? August lows somewhere around like, I don't know, 353 or something, right? The most recent lows into the 351s, right? Barely broke that right now. We're kind of muddled here at the top of this little bull flag nonsense. I got this purple line on the chart to suggest that at this time, next Monday, right, you should see prices actually getting lower if there's going to be any kind of downside sweep. So the way I'm looking at this right now is 360 on the triple Qs, a pivotal area where I think buys are going to come in if we get down to that area at all, right? It's going to be very important to see that sell side come out in the next 2 days. If you take a look at like Apple, for example, Microsoft, all these names, right? There's these bull flag scenario type things that are shaping up on these charts, and they can't make new lows. I think Apple under 165 becomes a massive bargain for even the end of the year. You can see Apple down pre-market slightly. So let's take a look at the S&P 500 futures here on this screen. We're trading, what are we trading? We're trading into that 80. Let's see what you see. Okay, you see my face. We're trading into the 80 right now, and this is what we had, right? Let me explain this to you. I don't know if there's a pen tool available here, but Friday, we got this B-shaped profile, right? On the Friday, very low volume leading it down into it, right? This suggests that they probably want to clear some of the auction to the upside before we get that leg lower. I, as a seller, right, as a bear in the market, not that I'm saying I'm super bearish, but I'm saying if I was a bear, if I was bearish in this market, what I'd want to see is prices reject pretty aggressively close to the open where there's volume, right? That's suggestive of the mid-80s. We start getting back into the mid to low 90s. It starts getting very iffy for the sell side because acceptance above that allows for price to accept in a distribution higher where there's a pretty high chance that we just start running to the upside. I want to see the sellers come in mid 80s on the S&P 500 futures, right where we have this drop off, right where this larger volume sits, to clean up this auction and then just dump it, right? Auction, clean it up into this low volume area. Max, I'd want to see that lower 90, but then we start trading that again. It gets very, very iffy here. So the sell side does have to come out today, tomorrow, right? We've got massive support into the low 70s and high 60s on the S&P right now, and this B-shaped volume profile with all that volume into the low suggesting some kind of upside pop. So the way I see this right now is that there's the expected rally that happened on the overnight, but the sellers have to show their faces here in the morning session to clean up some of the auction, to the downside, where we trade into the mid 30s or the high 20s on the S&P. Otherwise, right, we have upside. We have upside movement. It is Monday. We want to start this slow and steady. So let's not get ahead of ourselves, right? We want to make sure these trades are right, and we got to pick these pieces apart. So sellers to come out mid 80s, max mid 90s, right? Otherwise, we don't like it. We don't love the sell side. They got to push it under that 65 to see that continuation, right? That's a pivotal area, and I'll leave you guys with that. Also, keep eyes on oil and gold. I'm looking for a short on gold because I think it's too overextended based on the geopolitical news. It's not worth that much, and I'll see you guys tomorrow. I hope you like this stream process, right? We'll keep developing it as we go along, but I thought it'd be something nifty and cool to kind of change the perspective here. Ideally, I get the bugs figured out in terms of the technical issues, and we'll go from there, ladies and gentlemen. So thank you all. We'll do this again tomorrow. Have a great Monday, and I'll see you guys at community.tradeproacademy.com. Don't forget that we're actually going to live record a second part, a more